Hello traders, and welcome back to my YouTube channel, IPDATrader. Now in today's video, we are going to be talking a little bit about the supply and demand interaction, right? How do we identify valid zones? What's the reasoning behind those and why do they even hold? Right, we're going to be talking a little bit about what's happening behind the scenes, how that all is set up, and how you can implement that information to start trading the financial markets, right? So if this really sounds like something you're interested in, maybe you want to learn more about it, then make sure you stick through the entire video because once again, I'm going to be trying to provide you with knowledge and information that you can start applying today and you can potentially use to execute trade ideas and profit in the market, right? So with all that being said, guys, let's actually get started with today's video. So traders, here we are on the drawing board as I really like to do in this channel. And as we said before, guys, what we're going to be discussing today is the idea behind supply and demand, right? We can do that, supply and demand interaction, right? So let's start looking at different ideas, right? So once again, let's draw a market over here. Just a market of this sort, right? We can all agree this market had a break over here, right? Broke above the highs and then broke below the lows. So essentially we had a range and both ends of that range, this was the top, this was the bottom, got manipulated, right? So when we talk about supply and demand, it's nothing but the different types of POIs that we usually look for, right? And I'm not going to be explaining all of those, but once again, you have bearish and bullish order blocks. We've got breakers. You've got plenty of structure points at that point, right? So once again, when talking about supply and demand interaction, you need to understand that that is the dynamics that the market follows, right? When demand is exceeding supply, the market will push up, and when supply is exceeding demand, the market will push down, right? So that's the very first thing that we're going to be writing down over here. If supply is greater, right, than demand, market is bearish. If demand is greater than supply, the market is bullish. And the key idea that I want you to understand is that this will not change unless demand once again shifts supply or supply once again shifts demand. Now, how does that happen? Well, that's why you have multiple points of interest, right? So let's actually get rid of this market and let's draw a market where demand is exceeding supply, right? With what I've just explained to you guys, if you see a market where demand is exceeding supply, that market, right, should be technically pushing up, right? And how is this market going to be going down? Well, it's going to happen if supply exceeds demand and we start moving down. Now you need to ask yourself, where can that supply be picked up from? And this is where you have to look to your left. You have to identify valid supply zones, right? Which could potentially be some sort of, let's see over here, it could be potentially some sort of bearish order block over here, right? And that's going to be used as supply to picked up from. And that's essentially how demand, supply will shift demand. And once again, you will literally see that in the candles. And what do I mean by that? And I'm going to be showing you I'm going to be giving you a little bit more information in a second, but for now, bear with me. This should be pretty straightforward, right? Once again, this is a market where demand is exceeding supply. That's where we're getting that push up. Now, price is entering supply. there is a probability that this bit of supply that's being picked up is going to be enough for the market to be shifting back bearish, right? So you have to understand that as price is trading into your points of interest and you start getting those mitigations, right, where essentially orders are being closed and supply is being picked up, that is essentially where you have to be looking for order flow shifts and order flow protocols, and essentially monitoring the order flow as it is hitting your point of interest, because there is a probability that this supply may be enough to shift the market back down bearish, and you will see how price taps deeper and deeper into the block, right? Because once again, supply is trying to exceed demand so that the market can push down, and essentially the same thing will occur on the bottom, right? If you have a demand zone over here, right, which could be in the form of a big wick, right? You might have a big wick over here, which led into a big bullish candle, and now price is trading into that. That is the market looking for demand to potentially shift um, supply, right? It's pretty straightforward, and this may be a little bit tricky to understand, but rewind the video if needed. You should be good with that, right? You will see how the candles start trading into the block, and you have multiple mitigation plays where literally demand is being picked up. And once again, if there is enough demand sitting at this point over here, the market will start shifting back bullish. If not, right, if supply is still greater than demand, the market will just mitigate a bit, pick a bit of demand up, and then continue dropping and falling, right? So let's get rid of that. I hope that idea makes sense. And now we're going to be talking a little bit about a trick that you can implement to help you with that idea, right? So let's say, guys, you have a market of this sort where we initially pushed down, then we started pushing up, and now you're saying to yourself, hey, demand is greater than supply, we're pushing up, right? And eventually price will hit some supply and we'll start moving down. And now you're looking and you're saying to yourself, hey, where can I get involved to look for that demand to look from that supply to demand shift so that I can get involved and potentially execute and be and sort of take advantage of that demand exceeding supply and continuously pushing up, right? So you have to essentially denote your demand zones, which essentially will be your last buy to sell candles, your breaker blocks, whatever you want to use. You may have different points, right? And this is where you see inducement, and this is where actually everything comes into play, right? Because what will happen is that price will try to pick up demand over here. It may not be enough, and once again, you will see it's tapping deeper and deeper, looking for that demand, and if that is not enough to shift price, it will create a new leg down, looking for that next demand to pick up from, right? Maybe it trades into this one, and now price is once again trying to shift to because it's picking up demand. If that's not enough, once again, you will get a new leg down and you will see inducement being created, because once again, demand needs to be picked up in order for this market to start pushing in the opposite direction, which in this case will be clearly bullish, right? So it's currently dropping bearish, and if you want to see it move up and go bullish, you want to have enough demand picked up to shift the current supply, right? The current supply was over here, and price is slowly but surely picking up demand over here, not enough, drops deeper, picking up demand over here, not enough, drops deeper, right? And same thing goes for this block over here. It will try to shift. It may have enough or it may not. If it doesn't have enough demand to pick up from, it will drop deeper to eventually hit the origin, where you're most likely to see that shift from supply to demand, right? And you will see that in the candles. You will see how we're looking for that demand tapping deeper and deeper into the block, and then it will eventually shift back bullish once demand has exceeded supply, which has been being picked up from this point, from this point, from this point, and lastly from this point, where eventually demand was enough and it shifted the market back bullish. And this is all to do with the idea of forex trading, right? You need to understand that institutions and banks use forex as a hedge tool for the most part, right? They're trying to hedge risk. They're trying to offload risk. For that reason is that you see these markets most of the times range up and down. So you should not expect a forex pair to go down forever. You should not expect a forex pair to go up forever, because it's used as a hedge tool and it will mostly go up and down, right? It will have phases where it's just going down. It will have phases where it's just mostly going up. But for the most part, you will see that um, you will eventually see that it is going up and down, because sell and buy orders are constantly being introduced into the market, right? So this is another idea that I wanted to present you guys, and that is essentially that, right? You have to monitor blocks and see the demand or supply being picked up. If there is enough supply or demand in a block, it will eventually exceed and shift the market in the opposite opposite direction. That is a very key idea that you need to understand very well. And I've actually used these examples over here, right? Here's demand being picked up, not enough, it drops deeper. Demand being picked up, not enough, drops deeper. Inducement creation, not enough, drops deeper. Enough, and eventually moves in the opposite direction, right? So guys, I think that is pretty straightforward, and we're actually going to be continuing with the last example and idea that I want to present to you guys, right? I'm going to be keeping the writings to the right, that's no big deal, and we're going to be focusing on a new idea that I'm going to be presenting to you guys, right? So let's say, and for the sake of this video, we're going to be making this pretty straightforward, right? You have something of this sort, right? This is your most recent break, right? And just as I always teach, this is your expansion of the range up. And now you are identifying and trying to see the potential demand zones that have been left behind, right? That can potentially shift supply back to demand, right? Because if price is going to start dropping once again over here, it's probably doing that because it has hit some sort of supply zone over here that was strong enough for it to shift the market back into supply, and now it's looking for that demand to shift back bullish, because obviously the markets go up and down, right? So um when you're trying to monitor APY, and this is something that's actually very powerful, if you attach your fib tool, and unfortunately I cannot do that over here, we will do that in a second on the charts, but if you attach a fib with the 50% level, the 60, the 70, the 80, the 90 level, you will see the candles tap into those different levels, because once again, positions are being closed and demand is being picked up, right? So as price is trading into that, you will see a tap into the 50%. You will see some reactions away. You may see how it moves deeper, taps that 61%, more demand is being picked, and move away, right? If that is enough demand, then hey, it's going to start moving up just like this, right? If not, if it still needs more demand, it's going to seek for that 70%, right? And I'm going to be showing you the fib levels in a second, but it's going to drop deeper, look for that deeper mitigation, and essentially trying to look for more demand to shift the market back bullish. And if that is achieved, if that is something that the market has available at this price point over here, at this specific time, then once again, the market will shift bullish, and you will have that trend shift, and you can identify that demand has exceeded supply, and now we're pushing up. And the same thing goes once again, right? You will then look for your supply. Once your supply is hit, you will start seeing the mitigations away from it. You have your different levels, 50, 60, 70, 80, and you will see price tapping into those different levels, looking for supply to shift demand and continuously move down and eventually provide a new move down, right? So that is essentially all the ideas that I wanted to present to you guys, and we're going to be writing this one over here as well. Attach FIP, monitor different FIP levels interaction. That's going to be very helpful when determining POIs, especially if you're working with higher time frame blocks. Right. So with all that being said, guys, I hope that that was useful. I'm going to jump right back into the charts, and we're going to be looking for certain examples, and we'll just go from there, right? So just give me a second. I'm going to pause the video, and we'll be right back. So traders, we're now back on the charts for this final part of the video, and this is going to be pretty straightforward and quick. I'm going to be trying to sort of map out the ideas that I've just explained to you guys. We're looking at Euro GBP on the 1 hour time frame. This is not something that I like to trade, but I believe this will be helpful if you're trying to apply what I've just explained to you guys. So following the logic, guys, you will say to yourself, hey, this is my most recent break to the upside, right? This is my expansion of the range up right over here, this expansion leg. This was my previous retracement, and now we're essentially looking, right? Because if you look over here, there must have been some point that price has hit that was enough supply to shift this market back bearish down, to then start looking for demand once again, to now potentially be shifting once again and expecting a new supply zone to get hit to continue dropping into a new demand, right? So that's essentially how the market works and how the supply and demand dynamic works. So what you have to do, you have to look to your left and you have to ask yourself, where did price hit that there was enough supply for it to shift back bearish? And you look to your left, you grab whatever tool you want to use, and you map that out, right? And you can see we're hitting this specific block of consolidation. For some reason, the price decided that there was enough supply sitting in this area over here to shift the market back down. And now you're looking for demand zones, right? You're looking for demand to shift back bullish and essentially exceed supply, right? So what you would do is, since you know this is the leg you're working with, this is your break, you would map out your potential demand zones, right? As you can see, you have one over here, you have one over here, right? Which essentially is a mitigation of this one over here. Eventually, you have this one over here, right? And the origin, which is always your best probability scenario, right? So you look at this bit of price action and now you see, right, the ideas that I was explaining to you guys. So let me grab the tool. You see price comes down, looks for demand. Once again, if you go into a lower time frame, you will probably see mitigations occur over here and specific levels being tapped. We're going to be taking a look in a second, but for now, bear with me, right? Demand is being picked up. It's trying to shift. Not enough. Drop deeper. Next demand zone. You look. Price mitigates that. Looking for demand. Shifts for a second, but once again, not enough demand to be picked up. Return, break, and continuation lower. Inducement, most probably on lower time frames being engineered over there, and we drop deeper. Here the same thing goes, right? We tap that, we start picking demand, not enough demand to be picked up, we drop further down, and now you come into the origin, which is always your best bet. And now we're going to be sort of applying the fib tool, right? And we're going to be seeing how that works. So you would fib your POI from bottom to top. In this case, if you're looking for a bullish POI, and you have your different levels, and if we zoom now into a lower time frame, we might be able to see that a little bit better, right? As you can see, guys, price taps demand, starts mitigating orders, starts seeking for that demand to exceed supply, right? You look left, this is your block, and now you would essentially be looking for these different levels to be tapped. As you can see, guys, we tap the 50 right over here, we tap the 60, we get some reactions away from that, right? And we shift some structure, we come back down, we need more demand, we tap deeper, barely hit that level, and then eventually move up, right? So that is pretty much everything that I wanted to explain to you guys. If you spend enough time on the charts, you will see these things happen over and over and over again. But you need to be willing to dedicate that time in front of the charts to eventually be able to see those things, anticipate certain moves, and eventually be profitable that way. So to summarize everything, guys, I'm going to be quickly writing it over here. Forex is used as a hedge tool. So pairs go up and down for the most part. Demand needs to exceed supply for a market to start pushing up, and the other way around for supply, right? Demand supply would need to exceed demand for a market to start pushing down, right? Use your fib levels within your POIs to see the orders close, and to see the demand or supply being picked up. Once again, you have to monitor those levels if you're trying to understand where demand and supply is being picked up from, and if that's going to be enough or not, right? Most often than not, you would like to see a deeper mitigation if you're looking for that big shift in market structure all the way up, right? Because most of the times price will not shift until those deeper levels have been tapped. And this is something that you can use. You may not want to use it. It's eventually up to you. It's not necessary to be profitable, but it's just another tool that you can implement in your trading to make everything easier, right? But once again, you should be comfortable with that idea, and it requires a lot of time and effort if you're trying to make this work. So guys, with all that being said, that's eventually everything that I wanted to cover in this video. I wanted to thank you very much for listening, and please feel free to drop video suggestions below, leave a like, comment, and subscribe if you actually enjoyed the video. That would be gladly appreciated, as it helps me with the YouTube algorithm. So thank you very much for that, guys. Leave a video suggestions. I always skim through the comment sections in the video. So yeah, with all that being said, guys, thank you very much for listening. Remember, if you want to sign up for the mentorship, the link will be in the description below, and I will see you guys very soon.